Hello guys, I welcome you in this video. Today I just wanna discuss about time frames because I get asked this question a lot on which time frame is the best, which time frame to use, and also I have a lot of people asking me of which time frame I use. Now I'm just gonna break down the process that I recommend when it comes to choosing a time frame that's gonna work for you. Now, first of all, you just have to decide whether you want to be a scalper, you want to be an intraday trader, or you want to be a long-term trader. That's the first thing that you have to make sure that you clarify, is that choose what type of trader you want to be. And then from those classes, there are time frames. Now, there is a range of time frames that you should choose from. Now, for an example, you can't say you want to be a scalper and then you are confused of whether to check the daily time frame or the 4-hour time frame. Now, and you can't be a long-term trader and be confused whether you have to choose the 1 minute time frame or the 15-minute time frame. So here we have a scalper, and then we have the intraday trader, and then we have the long-term trader all the way down here. So we have a set of time frame. For an example, if you are a scalper, you have to consider going from the H1 all the way below. So you should make sure that whatever time frame that you choose as a trader, it should be less than the 1 hour. So you go from the 1 hour going below. That's where you start looking from when you're a scalper. This is just one simple technique, and then we're gonna get into details on which specific time frame you have to choose and so on. And then obviously as an intraday trader, maybe you should take it from the H1 and then go all the way up. Maybe you don't have much options, maybe towards the daily. So it's just straightforward when you're an intraday trader. However, you can jump back and forth and go to the 30-minute to kind of like figure out confirmations and some beautiful patterns there if you're struggling with identifying a good structure in the 1 hour. And then obviously in the long-term trader, a long-term trader has to choose maybe above the daily, in weekly time frames, monthly time frames, yearly time frames, depending on that particular investment that he is making. And then once you've identified your class as a trader, there is that one important step that you have to take into consideration. When it comes to time frames or when it comes to trading, you want to make sure that when you make a decision now, let's say you make a decision right now, you decide to execute maybe a sell or whatever. You decide maybe to execute a sell. You have to make sure that the next time you come back into this chart, you are not surprised of the price structure. For an example, you shouldn't execute maybe let's say you executed some kind of a buy here, and then all of a sudden you come back to watch the market. You find out that the market has went all the way far up there. It means that the market is faster than you. The time that you have on the screen is not enough for you to just make right decision. What you need to put in mind is that you need to make sure that when you execute a trade here, you predict the move, and then when you come back on the chart, you find exactly what you're expecting. If you're expecting the market to go down, you find exactly a downward wave, which is not that huge, which is not that different from your entry point. Why? This is going to help you with trade management. Now, for an example here, you can see that you execute your buy all the way down here. Let me put my horizontal line. You execute your buy all the way down there, and then let's say maybe your stop loss is somewhere below here. And then as the price move up, do you see that your stop loss continues to remain in this place? Meaning you as a trader, if the market continues to move down, you are gonna lose everything that you have made. Why? Because you were not here. The time frame that you chose to analyze from is far ahead of you. But if you choose this time frame and you come back to watch the price, you find that okay, the price is here. At least it's easy for you to say, okay, I will adjust my stop loss and move it maybe somewhere above here to just make sure that I protect that little profit that I've made. So you move your stop loss all the way above, and then you do your business, you come back again, you find that the price is now here. You are not surprised because you are waiting for that, and then you move your stop loss again, you are securing the profits that you've already made. You go back, you find that the price is all the way around here. You say, okay, now I'm receiving huge corrective waves, let me just close my trade, and then you make your profit. You've made a profit from all the way up there to all the way down here. So you've made your profit. However, if you just enter here, put your stop loss, and then you come back, you find the market that it has collapsed, you lose everything. That's the point of it. Make sure that you choose a time frame that's gonna go with you. You shouldn't be surprised when you come back. No? Don't choose a smaller time frame when you know that you don't have enough time to sit in front of the chart. Let's say you are someone who is working or someone who's going to school. No? It means that you'll only be able to check the chart in the morning. You'll only be able to check the chart maybe during the lunch hour, and then you are in the chart obviously in the evening. No? So you know that you don't have enough time. It is so easy for you, or it's advisable for you to choose maybe the 1 hour time frame, because when you execute your trade in the morning and then you do your business, when you come to check your trade during the lunchtime, the difference will only be 5 or 7 candles. It wouldn't be that much of a difference. So it will be just around 5 candles difference, and it's not that much. It's manageable. But then if you execute this trade on the 15-minute time frame, you come back, you'll find that the market has even reversed and formed a new trend. So that's the point of this. Find a time frame that's gonna go with you, a time frame that will not be quicker than you. I hope this is making sense. After you've chosen what type of trader you are, then go and say a time frame that's gonna work for you. And then lastly, you have to make sure that you don't just rely on one time frame. Make sure that you add at least other 2 time frame, a time frame a little bit above, and then a time frame a little bit below. For an example, if you choose maybe to say I'm gonna execute my trade on the 1 hour, then you have to add and say, okay, I will have the H4 as my high time frame, and I will also have the 30-minute as my smaller time frame. This is going to help you in such a way that if you don't understand what is happening here on the 1 hour, if it's hard for you to execute a trade, at least you're going to go to this time frame and say, hey, let me borrow your chart and try to analyze the pattern which I don't understand there. And then from analyzing at the lower time frame, you're going to find a better entry or a better confirmation. Same thing applies when you kind of like don't understand the trend or the direction of the market. You're going to say, hey, let me go and borrow the time frame on the 4 hour, and then from there I'm gonna make my decisions based on key levels and the direction of the market. I'm just gonna keep it short and leave it here. Thank you guys. Remember to like, share and subscribe. It helps me a lot. Thank you.